All right. Hey, everyone. Thank you for tuning in. I give some of my insights on SPY over here. So, one of the things that you should be aware of if you're trading SPY, or actually, if you're trading anything in the market, is meaning the equity markets, is what these different sectors are doing. Wow, look at that. Apple is all of a sudden 77.2% of the S&P. Microsoft is 6.7. Like as of like a week ago, they were pretty much tied. So that tells me right off the top here that Apple has done well or Microsoft hasn't. But what I want to show you is just these sectors. So sometimes we can get insight into what's going to happen in the S&P by just kind of checking out what's going on in the sectors. I mean, it's never going to be this easy, but just hypothetically speaking, pretend that 10 of the 11 sectors are completely flat and one sector is like been leading the market higher, but it's really overbought and it's at resistance. We know that things that are overbought that are at resistance tend to reverse and go lower. So in that situation, that one sector would kind of give you guidance into what the broader market's going to do. So we do have this thing here where we have this higher low, right? This is kind of what makes up our ascending triangle pattern. The sellers have been patient, the buyers have gotten more aggressive, but my kind of sense is, and we don't want to have an opinion. We just want to watch what the markets are telling us. But after this big, surprising rate cut of 50 basis points, I mean, I was wrong. I thought it was going to be 25. The market just isn't acting right here, right? I mean, I don't know if right isn't acting right, right? The fact that like the last 3 days, the SPY has really done nothing. What does this tell us? Tells us, the buyers don't really care. So this could be setting the stage for a reversal, and this could end up being a false breakout. A false breakout is when something looks like it's going to get above resistance, but within a day or two, or maybe three or four, it just kind of reverses and comes right back. You know what? Let's take a look at the volume. I don't usually look at volume, but I just want to see if it's been like exceptionally low. And the answer is it hasn't. Yeah. So, all right, let's look at some of these sectors. But I would just say, if you're long, stay long. But if S&P starts to get back below around 564, 563 or so, I think there's going to be some trades here on the short side. In other words, I think that will confirm that it's a false breakout and it will keep going. But just kind of stay long because there's a good chance that we start to kind of slowly move higher. But anyway, all right, before I confuse you too much, let's just take a look at the sectors. So the tech sector is the biggest sector. And, action here in tech has been subpar, I guess. I don't know. Hasn't really done much. Look at that. We've basically have done nothing. And then we're going to look at the biggest three stocks in the tech sector, which are also the three biggest stocks in the market. Apple action here is a little bit weak. Let's think about what happened on Friday. Too many people get caught up in like, is it this pattern? Is it that pattern? Let's just think about what this shows us. I mean, we could call this the old, I don't know, inverse sledgehammer or the old triple Indy. Back when I was a trader, right, we'd always like make fun of all the analysts and so forth that were on in the media. And, it's like we would always call it the triple Indy pattern, which, as you know, or you should know, is from the Back to School movie. But anyway, what happened here? Apple. Oh, and speaking of false breakouts, this is a perfect example. So Apple got up to this level that had been resistance before. There tends to be resistance at levels that have been resistance before because there's people who bought back here who go underwater like right after. And they say, if this ever gets back up to my price, I'm going to get out at break even. So when we get back to the resistance, you get remorseful buyers from here placing sell orders over here. And that creates resistance. But let's just take a look at this, right? What happened with Apple on Friday? It got all the way up to here. And by the close, it came all the way back down. So this is what we might end up calling a reversal day. Let's just think about this. The opening price was like right around there, right around 230. Over the course of the day, it got up to around 233 or so. By the close, what happened? The sellers pushed it all the way back down and overpowered the buyers. So forget the name, triple Lindy, inverse sledgehammer. You can call it whatever the hell you want. All right. Just think about what this shows us. What is this a graphical illustration of? And it's like I said, in the morning, it looked like it was going to be an up day, but by the close, the sellers took over. Sure enough, you had some follow through today. So this is pretty weak for the market here, right? If we go back to this, our holdings, I mean, Apple is the biggest stock in the market. It's 7.2% of it. All right, let's take a look at Microsoft here. Yeah, I mean, kind of negative action here too, right? I mean, it certainly ain't rallying. What's important here is notice the red days, right? A red day is a day where the opening price is higher than the closing price. So you've had 5 days in a row where the close was lower than the open. What does that tell us? Well, it tells us the sellers are lurking. The sellers are looking to get out, right? I mean, every day at one point it looked like it was going to be up, but by the close, the sellers had pushed it back down. And I guess we'll go look at NVIDIA. Yeah, I mean, look at NVIDIA. So NVIDIA is below important resistance here, right? So this particular price level around 118 is important. It was support, then it became resistance. Now it's resistance again. Some price levels are more important than others. That's just how it is in the markets, right? I mean, and if you don't understand that, you might as well go do something else because you're not going to be a good trader, at least this type of trading. All right, so we just looked at the big three. So tech looks kind of weak. All right, now let's go take a look at our healthcare sector. Now, God forbid, but if it looks like Kamala Harris is going to be the president, there's probably going to be some ideas on the short side here. Yeah, look at that. Healthcare looks really weak. So here's an example like we just talked about. We got to a level that had been resistance before. It became resistance again. And then what happens, like resistance is this big group of sellers, right? So when the market stops going higher, some of the sellers kind of start to look around and think like, oh, gee, there must be other sellers here. That's why the market's not going higher. And they're afraid they're going to miss out. They know the buyers are going to go to whoever is willing to sell at the lowest price. So what do? They reduce the price they're willing to sell at. Other anxious sellers see that and they do the same thing, and you get this snowball effect. So healthcare is looking pretty weak here. I mean, you don't need to be a chart guru to see this. And you can see here, right? Resistance, right? We get to a level that was resistance before it becomes resistance again. If you know where these important price levels are, your life as a trader is going to be much easier. If you don't, I don't know, man. Maybe you should do some origami or read a book because you're not going to be a successful trader if you don't get the simple yet profound dynamic here. Financials are kind of going sideways. Again, what do we see here, right? Get to the level that was resistance before and it becomes resistance again. It's not a coincidence. Markets tend to stall out at levels that were resistance before because of what I mentioned. The buyer's remorse. People bought here and they get underwater and they wait and they wait and they wait and finally gets back up to their level and they can sell and get out at break even. So remorseful buyers placing sell orders makes the level that was a peak become a peak again. All right. I think that's really what we really just need to pay attention to here. Just going to look at industrials. Industrials kind of going sideways. Different sectors are in the driver's seat at different times. All right, so this is like the one area of strength that we've seen is consumer discretionary. Just like we can look at the sectors to kind of get insight into what's going to go on in the broader market, we can look at the stocks within a sector to get an idea as to what's going to go on with that sector. Now, I know because I've been doing this for a long time that the consumer discretionary sector is dominated by two stocks. Amazon is 23%, Tesla is 13%. So, in other words, the vast majority of this sector could be weak, but if this two stocks that make up over a third of it are strong, it could mask some of the underlying weakness. So this means that either Amazon or Tesla has been pretty strong. So let's check it out. Yeah, see, Amazon looks strong, and Tesla, I would assume, looks kind of strong. Yeah, look at that. So Tesla's, here's our ascending triangle pattern again, right? As time is going by, the buyers are stepping up. So let's just think about what we just looked at. The market, for the most part, looks pretty weak. Well, I should say the sectors we looked at look pretty weak, right? We saw tech looks kind of weak, healthcare looks kind of weak, financials look kind of weak. Consumer discretionary has been strong, and it's like the only kind of thing that's been holding the market up. And this comes down to basically two stocks, Tesla and Amazon. So over the next couple days, we're going to figure out, or whatever, we're going to get a good insight into what's going on in the broader market just by watching what Tesla and Amazon are doing. If Tesla and Amazon start to reverse, those are the only two things that have been kind of holding the market up. So if those two stocks start to reverse, SPY is going lower, right? So this is going to be a pretty easy market to read over the next couple of days. You basically got two stocks to watch, and they're going to tell you what's going on in the broader market. My guess is they end up reversing, they go lower. The fact that we just had this 50 basis point cut and there really kind of hasn't been any follow through from the move up is what we would kind of classify as action. All right. I hope that helps everyone. Please get in touch with me if you have any questions. And yeah, I will hopefully see you all tomorrow morning. Thanks.